Hello, hello, hello. Welcome to Al Stock Trades. In this video, we're going to go ahead and do a 10-year projected analysis for the Tesla stock. Now, there's multiple ways you can essentially predict a stock price's value. You can do an intrinsic value calculation, which is a simple discounted statement of cash flows or discounted cash flow statement, which goes 10 years into the future and discounts back at a 10 to 15% discount rate or using the WACC model. Or in this case, we're using the price to sales model to go ahead and figure out what could be the price target of Tesla in the next 10 years. So if you're basically tuning in for the first time, I've been analyzing companies for around 10 years and pretty much studying billionaires across the world and being able to democratize financial information to essentially retail investors around the world through our platform, lstocktrades.com. So with this, we're going to go ahead and open up a screen here where we'll be able to go in and talk about this Excel spreadsheet where we basically directly pulled from our bot that we created. Now, if we go ahead and take a look at this, we have the revenues, the gross profit ratios, operating income. These are all important metrics. But in this case, I'm going to be focusing on the shares because that's the part of the calculation we're going to look at. And also, if you go ahead and scroll all the way to the right here, and let's just zoom in, I'm going to go ahead and focus on the price to sales. Now, we're going to do two different types of price to sales analysis. I took the average from 2013 all the way up to 2022, or even this number here, the trailing 12 months, to get an average price to sales of 8.76. And then I took 2016 to 2018's average, the price to sales ratio of around 4. So when we do our calculation, we're going to go between 4 and 8 to basically see at what level should the Tesla stock be worth in the next 10 years. And it's going to break it down year by year. So we're going to go here to the revenue, and we're going to also use these numbers here to assist us with our calculation. So without further ado, let's shift on here. First thing that I like to do is I want to zoom in a little bit here, and I want to open up the help menu. And I want to do some things here. I want to look at price target and the price target of consensus, first off of what analysts believe the Tesla stock should be worth. So already we have a target consensus of $284, a target low of 126, and a target high of $526 for the Tesla stock with a median of 260. Now, if we go ahead and move on to essentially the price target on an analyst display, I find this really interesting because if you pull up this graph, what you basically see is every time the stock price drops, which is basically in kind of this bright yellow here, the analyst price targets drop as well. So my point of showing you this is that you really can't trust analysts, because if you go back to essentially CNBC when the stock was trading near $100, they were saying that you should sell and you should not basically go inside of the Tesla stock. Now, we can go ahead and talk about smart money, dumb money, but we'll go ahead and make another video regarding what hedge funds are doing based off of the data that we've purchased. So from this, what we're going to be doing is I want to show you guys a graph in terms of the technicals before we go ahead and do our price target projection of the Tesla stock. So let's go ahead and let's open up the chart here. Okay. And let's open up Tesla. Let's do an interval on the daily, and let's do the past 700 days so we can get a good window. And what you can do, by the way, if you want access to this, this is our stock terminal. There's a 7-day free trial. There'll be a link down below. So if you open up this interactive window, what you'll basically see is a window you can interact with. Here are the support and resistance lines that are basically pre-populated and pre-graphed for you regarding whatever stock you would like to punch in, and also the Fibonacci sequence retracements. Now we're going to go ahead and we're going to zoom in on here, and what you can see is this line that it's kind of a dark blue line that's going down. That's the simple moving average 200. And this yellow line moving up is the simple moving average 20. Now, what we like to see is a short-term simple moving average crossing over the long-term 200-day moving average, which is significant of that of a golden cross, right? Which is technically when a 50 goes over the 200, which we've already seen in the Russell 2000. So Right now, we have a support at 177 with a support of Fibonacci at around 184 with a resistance of 197 and 208. So, keep this in mind as we're basically on our path up. I believe once we pass the 200-day, there's going to be a lot of algorithmic trading to bring this up. The question is, this is a Federal Reserve question, are they done? Is inflation done? And that requires a little bit more explanation that is going to be out of the scope of the video. So in that regards, we're going to have to first take a look at the average growth of Tesla to look at the growth rate, but we're not going to use that. And I'll, essentially explain why. So we're going to go ahead and go to 2013. As you can see here, 2013, they have around, they grew around $2 billion. Again, these numbers are in millions here. So 2013, we're going to put here 2013. And then in 2022, they grew around 800 and what is it, 81 billion here. So we're going to put 81462. Okay. And you can see that they have a growth rate of 51%. Just in the back of your mind, remember this number. Now, if you look at the analyst projections for the revenue estimates for Tesla, they're hovering around, if you were to kind of look at the most bearish one, around 26% to 30%. We're going to go ahead and use 25% because I would rather be overly bearish than rather, bullish. Okay. That's just kind of how my brain functions. So I'm going to go ahead and drop this down to 25%, pretty much undervaluing Elon, right? Which is good, especially during a time that we're in right now with so much uncertainty. Now, in terms of shares, they have around 2.9 billion shares, which is 2958. So we're going to go ahead and put 2958. And then we're going to look at the expected revenue. I'm just going to put last year's revenue, which is 81462. Okay. 81462. Now, this is where the magic is. We're going to go ahead and look at the price to sales ratio. And like I said, we're going to do the price to sales ratio between 4 and 8, technically 8.76, but we're just going to go to 4 to 8 to make it simple. So the first one we're going to do is we're going to do 4. And by inputting 4, what you'll basically see now, and we're going to zoom in on here so we can see in 2023, we should expect Tesla to go anywhere between $82 as the bear to $137. In 2024, 103 to 172. Now, if we were to go ahead and go 10 years into the future, we should see Tesla around 7. So again, I don't want to go down number by number. You can pause the video as I scroll down and look at it for yourself if you're interested. But if you go to 2033, you'll see the stock will be worth anywhere between $769 all the way up to $1,282. And again, I used essentially the 4 as the average price to sales because a lot of folks are thinking that because if you go ahead and take a look at the 10-year, it's hovering around 3.5. So if you use the relative risk rate and divide it by the inverse, you can get it approximate about 14% price to earnings ratio in terms of companies being at value at that metric. And if you were to kind of look at historically where the market's been at during those time points, it usually is around anywhere between 2014 to around 2018. Okay. So which is why I kind of focused in on those averages. But if we were to say, you know what, we're just going to take the 10-year average, we're not going to play these shenanigans, we can use an 8.76 basically price to sales. We'll just use 8, again, undervaluing the whole thing. Then you can see a bear of 165, a bull of 275. And if you extend all the way down here, you can see a bear of 1,500 and a bull of $2,564. Okay. So as you can see, there's a lot of success and room for Tesla to grow. As you might imagine, even with all of these, stock, different types of, splitting them, you can see that we're in a beginning shape of an S type growth. I mean, we can say S type growth. It's almost like a sigmoidal type growth, if you may, where we have a lag phase and we have an exponential phase. And a lot of folks think that Tesla's here. I think personally, Tesla may be here. Okay. So that's something that we may need to consider and look at, right? And let's see here. Yeah, so that's pretty much it right there that I wanted to basically talk to you guys about. And this is, kind of the battle of Tesla bulls and bears. There's a lot of things to look forward to. There's a Cybertruck that's going to come out. Also, there's the $25,000 Tesla, which if that does happen, it'll honestly dominate and destroy the market, because not only does he have the charging infrastructure, which he can honestly sell out as well, and not only does he have the data to create his own insurance program, which they basically already have in California, and the data in terms of the vision technology that they've basically created to where they have their AI that can be integrated into the AI bot that is supposedly going to be made within the next 3 to 4 years, if not sooner. Uh, it's starting to realize that Tesla is not just a car company. Now, if you say this to Tesla bulls that been in for a while, they're like, oh, well, no shit, right? But again, these are for folks. This video is for folks, for people that don't know that, right? So that's kind of the analysis of Tesla. If you liked it, please consider subscribing, liking, and honestly giving me your insight of what you think regarding Tesla. So if you want our lifetime access, we do have a sale. There'll be a link down below for more information for our Valentine's Day early special. As always, it's a privilege and honor to serve the retail community space, and I will see you on the next one.